the Treasurer says the gas export industry will pay a fair share of tax. He's announced changes to the way the PRRT works. It will mean $2.4 billion extra is raised over the forward estimates for the next 4 years. There's been some criticism, though, including from independent MP Monique Ryan, who says the fact the gas industry is accepting this means the government's not going hard enough. Monique Ryan joins me now. Thank you for your time. We often say the government should consult, get good outcomes. The government's consulted, the industry's happy. Well, why does that mean it's not enough money?
Look, I think, Tom, when you've got a gas lobby which is happy with an outcome that the government suggested, it does suggest that the government hasn't gone hard enough. So we know with the petroleum resources rent tax, this is a tax on excess profits from an industry which has reaped $40 billion in the last year alone from the windfall related to the war in Ukraine. So it's $40 billion that's gone largely overseas as profits from our gas. The government is suggesting an increase in the PRRT that will amount to $2.4 billion in increased earnings over the next 4 years, so only $600 million a year. I think we could have done a lot better. And the Treasury itself has come up with solutions which would have given us somewhere between $13 and $22 billion over the next 10 years. That's money that could be spent to increase Jobseeker, to increase single parent payments and to make things better for the millions of Australians who are struggling with cost of living pressures. 13
is a lot over 10 years. Obviously, that includes inflation and all sorts of things.
Sure. But
so what about the way it works, though? So you're saying not enough money. At the moment, what happens is the investment to be able to get a mine going and so on takes a lot of money and time. The tax deductibility used to be 100% of that. Now it's down to 90%.
90%.
What do you
That's
say?
right.
80%, 70%, and why?
Look, I think if we look at what's happened overseas in other countries, they've been able to take a much more significant proportion of those excess profits. We're not talking about normal profits, the sorts of things that companies have a right to expect over the usual course of running something like these gas developments. We're talking about excess profits, massive windfall profits, which they didn't see coming when these agreements were negotiated. This is $40 billion that's fallen out of the sky because of the war in Ukraine, and we should really be benefiting from that to a much greater extent.
It often depends what others are doing, right? Because investment can go elsewhere. There's other elements to tax. We're quite high taxing in regards to all of our other taxes. So, again, are you putting a figure on what the percent of that should be? If it's not 90%, what? And what confidence do you have that it wouldn't scare off some investment?
I don't think we need to be worried about investment. These are companies which are making massive windfall gains from their investments.
If you taxed all of it, they'd go. There's always a line. It's just where is that line?
Well, we're not talking about a change to existing arrangements in terms of the profitability that's built into the agreements. We're talking about taking a greater share of the excess profit. $40 billion.
But they make excess everywhere. Right?
No, but the profit is built into the agreement. We're talking about an agreement about what to do with the excess profit with the PRRT. And some people have been concerned that these changes are going to do things like changing the price of petrol at the bowser or driving away investment. But we're talking about excess profit here. These are companies which have already got a guaranteed of profit built into the existing arrangements that they have with the country.
But that's what you get with other countries too, right? You've still got to compare like with like. If we took it, are you saying we could take every dollar of excess profit and it wouldn't matter?
No, I'm saying 10% is too modest based on, this is not profit, this is excess profit. I know I'm banging on about this.
No, I know that, but I'm just sort of saying, where do you think the line is?
I think 50%, would be reasonable. Think about what this country could do with an extra $20 billion. Next year.
But how does that actually work? Because at the moment the tax is, they're reducing how much you can claim back off construction costs. Are you saying make that claim back 50%?
Oh, well, potentially. Or we could look at the other models that the Treasury has suggested, which build
a different approach.
Yeah, so the Callaghan review from the Treasury has come up with a number of different approaches to dealing with all of these. A change with the way that the pricing is calculated when the gas is extracted as opposed to when the gas has been processed. There's a number of different ways that you can look at these.
All this is global. Do you accept, though, it's about finding whatever the amount is, whether it's yours or someone else's, about finding an amount where we maximise the value for Australian taxpayers without scaring off investment? There will be a point where you scare off investment.
Investment's important, but the investment's already locked in. And what we've seen over the last few years, and this was brought to the attention of the Morrison government, this is not new, this knowledge, is that the companies have been as you would for commercial advantage, scaling back and structuring the costing and the deductions that they've got, the offsets that they've got on tax, so that they've just kicked the can down the road in terms of the tax that they're paying on those investments.
That's about sharing across investments, isn't it? All right, want to get you on a couple of quick things. Jobseeker, should it be something that older Australians in particular get a higher payment? It's harder for them to re-enter the workforce. Would that be a logical thing to do?
Well, older Australians already do receive a slightly higher Jobseeker payment than younger Australians.
It's about lowering that age, though.
Well, I think that it's about parity and equity. And the reality is that none of us could survive on $50 a day. Younger Australians don't pay less for milk or bread or for their rent than older Australians.
But they've got a better prospect of getting back into the workforce.
Potentially, but the Economic Inclusion Committee has told us just recently that it makes it harder for people to re-enter the workforce when they're on $50 a day. They can't afford to pay public transport. They can't dress appropriately for interviews. They can't
across
retrain.
the board is what you want this
across
to be.
the board. It's the only thing to do, and we've been told that that's what will help people get back into the workforce. That's what we need to do.
Just finally, the change as well on prescriptions. Do you have any sympathy for community pharmacies? I mean, this could be money ripped out, for better or for worse. The business model relies on people being in a pharmacy and buying something. Could we lose pharmacies as a result of this change?
Look, the changes to prescription rules are good policy. The government has offered and is fleshing out the details now of how those pharmacies can get that income back, and what that will involve is an increase in altered scope of practice for those pharmacies, and I'm very much supportive of that.
Okay. All right, Monique Ryan, appreciate your time today.
It's a pleasure.